Welcome to our mid-morning workshop in the crypto session. My name is Carly Howard. I hope that this will be a lively discussion despite the fact that we are sitting very far from each other. Hi. So when I first got this topic, I thought, you could really talk about anything. Partnerships in crypto. Is this a biz dev thing? Are we talking about entities? So we're going to discuss what the global climate for crypto is and where there's opportunities for the people who are most likely in this room. And I figured I'm actually a really great person to cover this topic because my consulting practice and now my legal practice has been international for the entire time I've been in crypto since 2017 and in asset management before that. I want to start by learning a little bit about you. Show of hands, how many people have been in crypto over 5 years? Okay, 3 to 4 years, 1 or 2 years. Anybody brand new, just putting your toe in the space? Hi, hell of a time to get into crypto. Yeah. No, seriously, welcome. I have just as much optimism as I ever did, even though the events of the past week probably mean that we have to show up even brighter than we ever have and build even harder than we ever have. I still think it's a really great time to learn about crypto. For those of you who've been in the space for a while, some of this may be very basic for you, but I'll bring it around, so just be patient. This is me. It's a very old photo that my firm is trying to get me to update. I do crypto all day, every day, and I have since 2017. I came out of law school here in Miami and worked with big law firms and international banks with ultra-high net worth clients, family offices, investment firms, et cetera, mostly on the wealth strategy side, setting up complex systems for essentially family wealth that looks like a corporate structure. So a lot of it involved tax planning, offshore, various types of entities, et cetera. I found that to be very useful when making the transition to crypto because a lot of my clients will ask, where should we set up this entity? Should we be in the US? How do we avoid the US? Should we be a foundation in Switzerland or an association, et cetera, et cetera? And I think that experience will tie into some of the things we talk about later in the sense that we're really seeing the new crypto industry meeting traditional finance in a big way right now. So I started a consulting practice in 2017 to work with a few select high net worth clients and help some startups that I had invested in, including one that was rocketing at the time. And as I was traveling around running this consultancy, I was in Bali and met some hackers and devs in Bali working on Bitcoin, and it was an absolute rabbit hole for me. The idea of peer-to-peer decentralized systems where there's no fiduciary in the middle, no custody, was absolutely threatening in a way because that had been what my entire career was. And so I had to learn about it, and it's just been 24/7 for me ever since. I've been living in Berlin, Germany for the past 5 years. I just moved my residency back to the US to work with K&L Gates. But most of my clients for some time have been in Switzerland, Singapore, Caymans and BVI, not the US. I have more US clients in the last year or two than I ever have, and I think that is what the industry has been. But not going to be. I think the industry is going to move offshore. So we're going to talk a lot about what's happening outside of the US today. And I've worked with pretty much every crypto trend you can imagine. So ICOs in 2017, 2018, and then in crypto winter, more infrastructure for blockchain use cases is what we were saying at the time. I'd be wary of anybody saying that now. And then as the market started to pick up, launching tokenized projects, I've worked with the the first crypto native family office helped launch that, NFTs, DAOs, anything you can think of. I've worked with those trends. So I'm a crypto generalist. There are many people in this room, I'm sure, who know a lot more than I do about payments or money transmitter licensing and very specific things like that. So today will be more about like the market and how we can set up partnerships for the future and being successful in the industry. The agenda is 5W how, who, what, when, where, how. And we'll start by talking about what the difference in these industries are. Again, this material will be very basic for those of you who have been in the space in a while, but the number one thing that people who are getting into crypto ask me is, what are all these acronyms? So I'm gonna go through some of those today and also talk a bit about the technology, because that's the piece that we often overlook. Do we really need to understand the technology at a deep level? Not really. When we send an email, do we know how HTML works? No. However, I think it's important for those of us in the industry to have a basic understanding of that. Who and when, we'll talk about crypto as an investment and also blockchain and digital assets as a technology, as a separate concept. And then the how, practical discussions and case studies, and mostly outlook. This presentation can go in any direction that you want it to go. It's a workshop. So if you have questions, please ask, and we can focus a lot on outlook. But really this workshop is for you to ask questions and for you to get the information that you need. And I could talk about crypto all day, every day. So we can go in any direction you like. I'll start by saying everything old is new in crypto. And for those of you who are coming from the traditional finance space, this is meaningful. You'll see a lot on Twitter right now, especially, by the way, if you're not on Twitter and you want to be in the crypto space, I hate to say it, but you've got to get on there. It's just how we know what's going on, and it's instant, and you'll be behind if you're not on there. I'm not making any kind of endorsement of anyone who owns Twitter or paying for a blue check mark or anything like that. I'm just saying that that's really how we get the news instantly. So you'll see on crypto Twitter that there's a lot of discussion about how we need grown-ups in the room in crypto. We need professionals. We need people who know regulations. We need people who know the rules and how traditional payment systems work. Because the crypto industry keeps running into problems that traditional finance has already seen. And for those of us who have been in the space for a while and are familiar with processes and procedures, it starts to get very tedious to see some of these crypto projects struggling or going under because they're not following processes and procedures that we know to work well. And it doesn't necessarily mean that they conflict with the technology of crypto either. So these are the three categories that, make sure you're seeing what I'm seeing. These are the three categories that we generally work with in crypto. Traditional finance is banking as you know it, brick and mortar, or even challenger banks that fall under a typical regulatory scheme. And I found the best definition of traditional finance online from Yahoo, which I thought was funny. And then centralized finance would be where I think most of the opportunity is today, and that takes some of the features of traditional finance like user experience, a good front end, security, processes and procedures that maybe fall under a regulatory scheme or don't. They combine that with the technology of crypto and wallets, etc. So you end up with some of the tenets of decentralized finance have been overlooked, but this is where most users want to be. And that's because, on the other side, the green block, decentralized finance can be hard. Decentralized finance is when payments are made peer-to-peer, directly. There's usually a trustless system involved. You don't have to trust that centralized finance because we're transacting directly, but There are security risks such as hacking, etc. You have to understand the technology. When I find out someone is interested in crypto, the first thing I do is buy them a Ledger wallet. And you might use Anchor or some other wallet, but I happen to know the guys at Ledger. So I just mail them a Ledger wallet and let them know that I sent it so they know it's not fraudulent. And I tell them to get up and running with this hardware wallet. And I would recommend that to anyone in this room as well. If you think you're in crypto and you're using a centralized exchange and you're not using a wallet, that's when people say, not your keys, not your crypto. And if you think you're in crypto and you're not using a hardware wallet of some sort, you're not in crypto. So go home and do that. Very important, especially given recent events. And when you get that wallet up and running, you'll understand what the slide means by it can be very tricky and very difficult. This is why people want to be in that centralized finance space where they put their trust in someone to hold their assets, and they trust that that platform will be there and they can get the assets in and out. And that's why I think that for partnerships, this centralized finance space is where we're going to see the most opportunity. There's not much for payment processors and custodians to do in the decentralized finance space, and for those of us who are DeFi believers, that's the point. But most consumers want to be in that middle space. This is very simplified. This is so oversimplified. But this is an easy way to try to understand technologically and that trustless idea. What's the difference between the traditional financial system and a DeFi system? So in TradFi, you've got something overseeing the process. This is you guys are going to hear about regulators and regulations backwards and forwards. I'll talk about it a little bit later as well, but I'll try not to. I'm afraid you're going to become weary of that. So I'm going to try not to talk too much about regulation today. But in the traditional financial system, you've got someone who is running the show, and they're overseeing the process and overseeing the payments, and that can be a good thing. It can also the critics say that it can also be a way that we give up control and that we are given to surveillance, etc. For example, central bank digital currencies, which we'll talk about later, are a surveillance tool, period, end of story. How that surveillance is used, whether it's used for a good purpose or not, is in the eye of the beholder, so to speak. So proponents of DeFi would say, we don't need that central system. Let's just interact together. And in the little diagram here where they have the computers, that's really important too. Anyone who is running a node can participate in the system. So it's part of the DeFi dream that you can basically log into your computer and be part of this. That's where a lot of the community feeling comes from in DeFi. If someone could shut the door, that would be great. Yeah, thank you. So let's move on to the next slide. I've already gone through a lot of this, but I wanted to list out some of the regulatory bodies. That entire first line is US. The entire second line is lots of other countries. One of the issues that we're facing in the US right now is that we have a lot of different regulatory bodies, especially the SEC and the CFTC, who are essentially vying for control over the crypto industry or certain processes within the industry, whereas other countries have one singular financial regulatory authority that's in charge. So they've been able to move faster, they've been able to make statements about crypto and get the industry moving while the US has not. You can also point the finger at certain specific players within the US regulatory environment who are kind of holding things back in the opinion of the crypto industry. But in traditional finance, regardless of how it's regulated, the investors are expected to make rational, deliberate decisions with standardized, governed risk models. That has not been the case in crypto. There's been a lot less emphasis on the processes and the risk management there. Banking or traditional finance is a mature industry considered to be more secure, but usually offers lower yields. It's not as fun. The oldest bank was founded in 1472. Bitcoin is only 14 years old, and Bitcoin just had a birthday. Yay. Versus decentralized finance, you'll see I have a lot more to say on that side of the page. We've already talked about it being peer-to-peer. Self-custodied is what I was just discussing with the hardware wallet. That's the word we would use. Mutable means that the blockchain cannot be changed. Blockchain is public or private, depending on how it's built. I wasn't planning on getting into how blockchain works. I certainly can, if you like. But the fact that it's a ledger system where each block basically verifies the block before it. When I'm in Germany, I tell Germans that Germans should love the blockchain because everything is always verified all the way back to the beginning, and they love this. It should be uncensorable and transparent, where there aren't any back doors and all transactions are right there for anyone working in the system to see. Smart contracts make up the backbone of DeFi. It's a misnomer. In fact, one of the first articles I ever wrote in the space was like, why are we calling this smart contracts? Because from a legal point of view, it might not be a contract anyway. It can be, but it might not be. And are they smart is also a case-by-case basis analysis. But this is what we're calling it, so here it is. Smart contract executes immediately without human interaction. Now, I have seen a lot of people in this space trying to apply smart contracts to lots of things. For example, since my previous career was in asset management for family offices, estate planning, high net worth tax, etc., I've had a number of projects approach me asking, how do we put smart contracts into an estate planning context? And for very straightforward estates, I see why that is of interest, but for the most part, I'm not a fan of that. That's an area where if you have someone you trust to serve as your fiduciary, your executor, etc., that's probably somebody you want to rely on, because from the time someone puts their estate planning in place to the time they die, so much changes. In my career, I'd rarely seen a document that was very, very, very specific play out exactly like the grantor wanted before they died. A trust agreement that manages lots and lots of assets for multiple beneficiaries, for example. So I as much as I am a DeFi fan, I am discerning about when we use smart contracts. There's also been a big gap between what's going on in the tech world and what's going on in the legal world. So if we're looking for opportunities in the space, that is one. Lawyers who know how to read a smart contract, accountants, financiers, payment providers, knowing how those smart contracts work is really useful, and I think that there's a huge gap there that we can try to fill. On-chain means it's on the blockchain. As I said before, this is kind of the dream, that people will be interacting directly. I would say that since it's a new technology and a new industry, there's less regulatory guidance, but higher financial yields. And that's why we're seeing more people stay in the space despite all of the challenges that we've had. This is where partnerships become tricky at this stage in any new asset class. And if you look at crypto, so far it has followed the same trajectory as most new asset classes. And at this stage, the yields start to lessen, and the risks might lessen as well, but not at the same rate. So we need to look for ways that we can build the technology in the space and make it useful, and find those efficiencies of scale that TradFi is so good at. Now is the point in that new asset class trajectory where that becomes really important. I would also mention the terms yield farming, which is also called liquidity mining, staking, and just general mining, token mining. These are all native to the technology of crypto, and something that I think traditional finance companies are interested in and should get more interested in, because that's how we create the full financial cycle for crypto. It's not just launching and trading tokens. It's not just venture capital through tokens. There's also income producing, yield bearing types of transactions that take place. So with centralized finance, we're combining the different characteristics of both TradFi and DeFi. And I put some examples here of exchanges. Again, when people ask me like how to get into crypto, go on an exchange. That's a tough thing to say right now. Coinbase is probably the one that I would recommend the most right now. I'm not making any kind of representations whatsoever, but looking at attestation and liquidity, they seem to be doing okay. But just go on there, and even if you just spend $100, buy some Bitcoin or Ethereum, just buy the crypto and see how the exchange works and compare it to what you've done with Robinhood or your Fidelity account or your 401k at work, and see how that compares. Those centralized exchanges are really tricky right now, but that's where the industry has been focused. I think I saw a hand.
Can you talk a little bit more about liquidity pools? Because when the way it reads, it's almost like an unofficial bank account in the crypto world. So you kind of give us some nuts.
Yeah, I think the question is, can I talk some more about liquidity pools and how that relates to traditional banking? Yeah?
I'm not so interested in the traditional banking because I understand that, but it just seems like it's almost comparative. You're giving someone a reward for leaving their money there that the centralized, DeFi.
Okay.
Same way a bank would reward people with interest for leaving their money in the account that the bank can then lend.
The question has more to do with when users leave liquidity in a pool, is there a reward? It looks very similar to what's done in banking when they're depositors. And it can be. So this is one of the areas where the United States has different laws from other countries. In other places, it's been well established that liquidity pools for staking are not the same as a bank pool because there's no centralized entity. So the bank is taking money and making its own decisions about how to deploy this capital. And that very often that's always going to come with regulation and various policies and procedures of regulatory bodies and countries. But with the staking pools, there's no centralized entity that's managing that pool. It's a pool of liquidity where the interactions are direct. So we both sign up to put in our liquidity, and if this happens, then that is paid. If some other thing happens, then something else follows. So there's really no bank that is overseeing that or making decisions about it. So this is one of those areas where we can't seem to get any clarity here, but in other places, this happens a lot more readily. And an area where I think there's a lot of growth opportunity as well if we don't crush it here.
So how do the liquidity pools work?
How do the liquidity pools work? Okay, so when you have a certain amount of the token, the Ethereum, for example. Well, Ethereum's interesting because they just did the merge. But when you have a certain amount of that crypto, you are able to go onto the platform and essentially put that crypto to the platform for various use. So most of the platforms require you to have a minimum to participate in the liquidity pool. And sometimes you'll see different layered projects where they're built on top of Ethereum, for example. So the liquidity pools will be in Ethereum or that other layer 1. So it's really a way to target people who are heavily active in the community or investing in the community, for example. And then the project will use those liquidity pools for various things. This is also, I didn't talk much about DAOs in this presentation because I thought it was a little bit beyond the purview of the presentation, but this is an area where I think that decentralized autonomous organizations are really helpful, because what those liquidity pools are used for can be set up by this decentralized organization and voted on, and then those things all tie together. So I would also look to the future to any of these projects that are properly using a DAO and a DAO that has great tokenomics and governance and has the proper legal entities and wrappers and is making decisions about that liquidity pool. That way it's really a direct vote of the people who are in the liquidity pool, and those decisions about how the liquidity is used those decisions are put back to the people who have an interest in that. That's getting more into the DeFi space, though. Like, the whole point of a DAO is that it is decentralized, and we've seen some kind of in-between structures where they weren't decentralized quite enough, etc. And I would also point out that in the United States, when the securities issues around tokens kind of came to a head, like back in 2018, 2019, the idea was, is this a security token or a utility token? And that is still important in other jurisdictions. It's not as important in the US anymore. It's moving more toward how decentralized is your project. So CeFi companies are not really in that space. Let's see, let me find where I was in my presentation here. So in the CeFi space, I would point out that the user experience, the regulation, the processes, procedures, those are all places where the industry is going to be growing tremendously. So to the topic of the presentation, partnerships, this is where we can really add value. This is where we can be the adults in the room. We've already talked about how crypto is peer-to-peer. That makes it inherently borderless. So when we started this process, I say we, I got in this in 2017, which, there were people who were in this much longer than me, but even back then, the idea of having to follow regulations in various jurisdictions was very difficult, and we're starting to work some of that out now, but this is one of the biggest topics that I deal with as a lawyer, and also when I was consulting, are these projects asking, we've got developers in over a dozen different countries, we've got users in countries all over the world, like how do we make this happen? The idea is that it doesn't matter where you are as long as you're connected, and the technology sometimes makes it actually impossible to adhere to cross-border regulation. This is something where we're coming head to head. Many foreign jurisdictions have clear regulation already, though. I want to point out that Europe is way ahead. They've got a new legislation coming out. It goes into effect in February 2023. Actually, you can read the full draft now. They were withholding the full draft for a long time. It's actually pretty on point in my opinion. It's been criticized, of course. Switzerland has been promoting what it calls Crypto Valley in Zug for years, and its regulation is called Blockchain Act. Singapore is another jurisdiction that's been very popular. We're seeing people kind of move from Singapore to Dubai right now, but I do a lot of business in Singapore. And then the offshore jurisdictions are always kind of a cutting edge on new technologies. So definitely keep an eye on them. I left Bahamas out of here, but they actually have been really cutting edge with crypto. This is a map with just some notable jurisdictions. Again, I just wanted to point out that the US has more regulatory authorities than a lot of other places, which is causing us a lot of issues in the space. But if you're looking for opportunities and you're able to go out of the U.S., these are the jurisdictions where we see the most regulatory certainty and probably a lot of opportunity for partnerships and business. I see photos, I'll wait. These are the main regulatory bodies in the U.S. And again, I could talk about this for hours as well. I really don't want to harp on this. But I'd say that if you're in this space, it's very important to know about what's going on with the SEC and the CFTC. And I think Brandy covered all of this very well this morning, so there's no point in us going into that today. On the legal side, an entity that is really popping up and causing some issues for crypto companies is OFAC. Because of sanctions. If you really want to follow something that I think is patently interesting, the Tornado Cash case is just super interesting, especially if you go get that Ledger wallet and you actually set it up and you see how transactions work between wallets and that someone can just put something into your wallet, you'll understand how OFAC sanctioning a wallet, sanctioning a smart contract is really, really interesting and actually in some ways butts up against constitutional issues. To date in the United States, code has been considered free speech and now code is being sanctioned by OFAC. So we're still waiting for all of that to work itself out. There have been a number of amicus briefs filed by really cool projects, including some legal DAOs in that case. So I would highly recommend getting caught up to speed on what's going on in that Tornado Cash case. These were on the map previously, so if you took a picture of that map, you might want to take a picture of this too. I add Canada in there just because they've been a leader in some areas, including ETFs. Yes, there's a question. Okay, the question is, yeah, the question is around what are the implications of the Tornado Cash case for developers? And I would say, I just greatly shortened your question. I would say this is where lawyers are really putting their foot down, that it is known that code is free speech and developers should be free to write the code. It is not playing out that way in real life because of these OFAC sanctions. And my perspective on this is that OFAC has gone too far and that sanctioning smart contracts, sanctioning the code is not appropriate. We've always seen sanctions tied to a person or an entity. Again, it's that idea of being decentralized or centralized. When there's a sanction and there's a bank account or a person that you can tie that sanction to, okay, it makes sense. So in this case, we've got code being sanctioned, and who are you going to tie that to? It's the developers. And that has caused it's caused two simultaneous things. It's caused some developers to be very afraid, and there's been a chilling effect on the industry in some ways. That has already happened, and if this case isn't rolled back, we're going to see more of that. But it has also caused some really interesting bad behavior. Someone was out dusting Tornado Cash, like little tiny pieces of tainted crypto assets into famous people's wallets. I'm sure you heard about that. So I think that's pretty representative of what happens in crypto when we have these big cases or decisions or regulatory schemes come down. We have the crypto anarchy part of the process where somebody is fighting against us, and then we have or somebody's fighting against the new rules, and then we have people who kind of back off and wait until it's settled. That backing off and waiting till it's settled has been very detrimental to the U.S., in my opinion, because we've got all of these countries that have already had VASP laws and clear regulation, and there's just a lot of, there's been so much business going on offshore, especially in places like Singapore, Dubai, et cetera. There's been a lot going on there. The U.S. has been kind of just relying on the fact that there's a lot of investment here and waiting for regulation to happen, and it's really causing a chilling effect. And I think as the global economy starts to really clamp down in whatever this global recession is, that might become a problem for the U.S., especially in light of the events that happened last week. So if you're looking at opportunities offshore, these are really good jurisdictions to go to. There's also regional growth happening. Again, everything I'm saying today could be totally different post last week. But so far, South America, I just did DevCon in Colombia. South America has been a really popular place for crypto because user adoption is super high there, and a number of countries there have super high inflation, and people are looking for ways that they can get access to finance, banking, et cetera. So that's a place to look for partnerships. Also, Africa, it's got a small percentage of the market overall, but in the places that like crypto, they really like crypto. Again, a number of African countries were very quick to adopt cell phones and texting, and they'll pick up their phone and do things on it. So any kind of financial technology, including crypto, is very popular there. I've put Europe at a who knows, because even though this MiCA legislation is great, the Russia-Ukraine situation there is a total unknown. My natural gas bill at my flat in Berlin tripled. It went from 140 to, let's see, it was 140, then 540, and then I called them and got it back down to 380, I think. So that's just my own personal example. Like things like that for a lot of people are very worrisome, even if they can afford to pay the higher bills, and inflation there is out of control. So I don't really know what Europe's going to look like. I say the same for the Middle East. A week ago, I would have been very bullish Middle East, but a lot of investors got hit very, very hard. I haven't seen as much about exchanges being Asian exchange. There's at least one that is reported to have liquidity issues, but for the most part, the exchanges in the U.S. are the ones that are having liquidity issues. But I still think that Asia and the Middle East was hit very hard by the scandal last week. And there's some other jurisdictions, such as Japan, that have been known to be very crypto-friendly, but we just don't hear about them very often. Depending on what your product is and what you're offering, these are probably some good areas for growth. I want to point out two different products that are worth keeping an eye on that we really don't have any clarity on in the U.S., or they've been expressly not permitted. Maybe not made illegal, but not permitted. Central bank digital currency is virtual money backed and issued by a central bank. I think in the US, we haven't been really enthusiastic about this because Circle has USDC. Like, if you want to transact in a cash equivalent, like this is crypto, but it's kind of just moving around like cash, most people are going to USDC or USDT, which is a Tether product. But in other places, stablecoins haven't really taken off. So a central bank digital currency is a lot more enticing in those places. So if you want an update on what's going on with CBDC, there's a link here to Atlantic Counsel. They've got a map, and you can go to that link and you can see what's going on. I highly recommend that. Another thing that I talk about pretty frequently. Actually, tomorrow I'll be in Boston with the head of ETFs for Grayscale talking about ETF updates. In the US, a spot ETF is not permitted, but a futures ETF is permitted, and the entire crypto industry is baffled by this. Yes, we've heard Gary Gensler and the SEC tell us why, but it still doesn't make sense to most of us. So Grayscale is a company that's trying to launch a spot ETF, and they're actually in litigation with the SEC over that right now. So I could talk about this forever, but we're running out of time. My point is, many other countries have been doing spot ETFs and they work just fine. So I don't know why we don't have this here. If that's something that your company wants to get into, it would be, there's other players, but you can look at what's been going on jurisdictionally and see what partnership opportunities are there or what you can build that will be available when it's finally allowed in the US. I would argue that blockchain's only meaningful use case to date is finance. Like I said, I worked with a number of projects back in the day that were looking for blockchain use cases, and it just doesn't seem to materialize, or it hasn't quite as much as finance. There are a number of centralized finance and traditional finance products that are going to be popular in the space, and I've kind of listed out here what I see for the industry. You'll see toward the bottom in quotes, real world. I have a slide that's like outlook, and I'm going to jump in and say my outlook for crypto once we get past current struggles is that real world crypto is where it's at. Real world NFTs, real world lending, anything that's tying this digital crypto space to something that is traditional finance or that you put your hands on. I think that that's where there's a lot of opportunity going forward. And of course, regulatory and compliance, that's not going to stop. That's going to be very, very heavy. And then potential partners in CeFi, there's a question mark at the end. That's DAO, not DOA, that's DAO. If there's an opportunity in the more DeFi space, I think it would be DAO lending, which I mentioned earlier. Otherwise, digital asset banks and payment processors are becoming more and more popular in the crypto space. The traditional finance companies that I work with are constantly asking about those areas. And then I threw this slide in here just to point out that blockchain is not just the crypto financial markets. There's a Web3 aspect as well, where something is more peer-to-peer, but it's not a financial product. So I would just point that out. If you're in venture capital at all, you're going to hear the term Web3 over and over and over. So that's worth keeping an eye on as well. Outlook. I have put little points all along about Outlook, but I just wanted to sum it up by saying, I think we have to ask ourselves, what's the future given the current uncertainty of the industry? And I feel like we're at that point where, crypto constantly gets compared to the .com era, and when Amazon started, it was a bookseller. Now look at it. Of course, we're going to have those same kind of examples, and we're seeing the same kind of implosion that happened with .coms right now. If you remember, 70% of them were just wiped off the balance sheet. I don't remember the year, but it just happened very suddenly, and people were freaking out, and they were saying, why were we listening to these kids in hoodies, etc. So we're kind of going through that right now. Don't let that stop you. What I want to see different this time is that it's not just 4 or 5 mega companies that emerge, and that would be this Web 2 here. What I want to see is a vibrant ecosystem of lots of projects. That's what the DeFi dream is. That is what decentralization is all about. And even if we're looking in the CeFi space, I hope we don't end up with the situation where we've just got a handful of players. So while CeFi is stumbling, will these developers that you were asking about earlier, will they start to build decentralized projects with cases like Tornado Cash happening? I don't know. Offshore movement. America has money. And when I talk to projects who say the regulatory environment in the United States is a mess, I don't want to be there, we have a founder who's US, what do we do to avoid being pulled into what's going on in the US? They'll very often backtrack and say, you know what, most of our investors are going to come from the US, if not at a seed round, at a Series A or B, and then we just go toward setting it up properly, getting things registered in the US, et cetera, et cetera. But if America starts to slow down its investment, if there's a freezing effect here based on what just happened in the Bahamas, then we might see companies starting to build in other places where the regulatory environment is more favorable. And in some ways that's already been happening, which is, I just pointed out what we're looking at now is something that happened in the Bahamas, not necessarily the US. And there have been a number of companies that set up shop in other places to avoid the US uncertainty. So I really think that so much of what is happening with the environment and the industry and partnerships and where our business development is coming from stems from that regulatory uncertainty. And I really hope we don't have to wait for certain persons to retire out of regulatory agencies in order to get that clarity. Unfortunately, I think that's what's going to happen. So we are out of time. I had thought we'd have some practical discussion all along, so thanks to the folks who asked questions. And if you have questions, I will stick around for a few minutes. Thank you for joining us today at CrossTech for the crypto workshop session. And I think you have lunch now? Are we going to lunch? No, not yet. Oh, no, I'm sorry. Thank you very much for joining us at CrossTech. Enjoy your next session, and I will see you when we do have lunch.